Yeah, it's going to be interesting to see how they're going to deal with this, because I would put these inflation numbers in a slightly different context. I think it was last week when when we got some numbers out that the fiscal authorities, the government, has been spending faster than they were planning. At least a large part of the overall budget has already been spent. So on one hand, we have a government which is spending quite quickly, which is inflationary. On the other hand, we have a central bank which want to take that inflation out. So I wouldn't be surprised we're going to see further rate increases coming through, and that the market still needs to adjust for that to a certain extent. Well, erratic is probably a good description of it, right? It's been weakened, say, Q2, Q3. Then the government came through with some stimulus, and then it picked up quite quickly as well. I think the latest numbers which came out showed a little bit of sign of weakness now. And I think that's a reflection of the initial impact of the fiscal and monetary stimulus, which we saw later on in the summer, that starts to fade. Now, this is just a first data point, so maybe you got to be careful. These things come over with some margin of error. So maybe the next data is going to be a little bit stronger again, but I suspect that over the next couple of months or so, the trend is going to be that some of the data is going to roll over, as the initial stimulus impact starts to fade a bit. Now, I think this is both, actually. First, on the domestic side, as I said, you have the initial impact of that fading stimulus starting to take place. We're now a good 6-7 months later, so that's the first effect. Secondly, we've seen a pickup in global trade. We've seen a pickup, for example, U.S. retail sales, but exports out of Asia into the U.S. has not been that strong, and that's partially because Asia is losing competitiveness. The U.S. consumer, whatever he buys now, is not just made in China. It could well be made now in Arkansas or Mexico. So there are structural trends of Asia losing some competitiveness taking place here as well, which suggests that maybe the upside in some of these numbers and trade numbers is not as big as what you expect previously. I think the underlying near-term momentum might start to roll over a little bit. But if we look a little bit longer term, we see the implementation of all this reform now coming through that I think has extended the period over which GDP growth can exceed 7% in China as the impacts of that reform will come through. Now, the sequencing and the timing and how quickly that impacts economic activity is very difficult to forecast. So there will be erratic movements around that. But I think over the next couple of years, we're going to see quite decent growth still coming out of China. But maybe we've seen some good quarters now, and early 2014 is going to be slightly weaker than what we've seen over the last 1 or 2 months.